Steve, let's talk about the rest of the world, as it were, and particularly those big tech companies that have been getting so much money with huge, I would say, huge capital investment about AI.
Yeah, look, those companies have had a great run. Obviously, NVIDIA we all know about, but Microsoft, Google, and so forth, Amazon. And the question really is whether the market is valuing this situation appropriately. You're talking about massive capex, by some estimates anywhere from $600 billion to $1.2 trillion per year on this kind of stuff. And the question the market is starting to ask itself is, are the revenues going to be there to offset it? And that capex is not just a cash expense, but it runs through the income statement in depreciation and so forth. And so it affects their margins, it affects their profits, and you have to you have to create a huge amount of revenue to justify the magnitude of the capex that is going on right as we speak.
So, Steve, back in the olden days, at cap cities, for example, when I was running budgets, if I had a capital expense, I had to show what the projections were about when I would save that money back in order to justify it. And we usually had a rule about a couple of years, maybe 2.5 years, we had to earn it back. Is anybody taking pencil and paper, if they have it anymore, and doing that with AI? Is anybody actually thinking about where do we really see this in the real economy in terms of increased productivity?
Well, that's exactly what's happening now to some degree, and why you're starting to see a bit of a rotation. It might be just a mean reversion after a big run. It might be people doing what you talk about, but people are doing it. And by the way, this is a very debated subject. There's not a preponderance of view on one side or the other, and I don't even, frankly, have conviction myself. I think you could argue either way, although I think the numbers are pretty daunting. But what you're starting to see the analysts do is exactly what you said. They're starting to pencil into their projections. This is the level of capex. This is the level of depreciation we're going to be taking for it. This is the amount of revenue we have to generate to justify that and to achieve the kind of paybacks you're talking about. And you say to yourself, is this really plausible? Are we really going to, is Microsoft really going to be able to generate $30 billion of revenue from AI? I think that's actually a roughly right number over the 2 years from now. And given that at the moment this stuff is essentially free, you might pay $10 a month for this or that, it's a real open question whether those kind of revenues are there. Let me just make one other point, which is that if you think back on the success of Microsoft, Google, Facebook, they were essentially software companies. I mean, there was certainly some capex involved in that, but nothing on the scale of what we're talking about here. And so we're in a whole different world, a whole different ballgame for these companies. And by the way, it's also a competitive ballgame. OpenAI is not going to own all of AI. Microsoft is not going to own all of AI. It's going to be they all have to protect their market share, and it's going to be a pretty competitive world.
So, Steve, I'm never going to ask you about specific investments that you're making or not making, but just an attitude of an investor, when you're looking at this phenomenon, you're looking at the NVIDIAs of this world, and Microsoft and others, just take off like a rocket ship. It must be difficult to stay out of it. I mean, if you're running a big fund or something like that, when you're seeing the fear of being left behind must be enormous. But what do you do when you don't know whether it's going to work or not going to work?
Well, yes, this has been a challenge for active investors this year because these big companies, Microsoft is something like a 7.3 or 7.5% weighting in the S&P. Very few money managers have a 7% position in anything. And so it's very, when you know the numbers, when you disaggregate the Magnificent Seven from the rest of the market, what the differences are. And so it's been very tough for active management. That's point one. Point two is, look, this is no different than any other investment. You do your best work, you figure it out as best you can, and you make a bet. And sometimes you're right, sometimes you're wrong. I would say we tend to be pretty conservative in our view of this stuff, and a little bit of the view that we've seen some of these movies before, and we want to be a little careful about piling in, especially late in the game.
Is there a risk here that the enormous success of that Magnificent Seven, whatever you want to call them, is masking other weakness in the stock market? Because as you say, you look at the rest of the market, it has not done all that well, and yet we tend to gloss over that and say, but the market in the aggregate, boy, is doing great.
It's totally masking it. If you take the Magnificent Seven out and you start looking at some sectors, especially things like manufacturing, industrial, stuff like that, markets actually had a pretty poor run over the last, certainly this year and even, I think, last year. And so, yes, I think we're starting to see, when we listen to companies, we listen to our managers, we are starting to see signs of softness in the economy on the consumer side, on the manufacturing side, and so forth. I don't think the economy is falling out of bed, but we definitely are in the later stages of an expansion.
Let me ask about an ancillary part to the AI, if I may. When we talk about NVIDIA and Microsoft and things, but the power required to drive this generative AI is enormous. I mean, I'm hearing stories now. There's just really a lot of stories, and that's really driving a lot of demand for power. Is that an investment opportunity?
We have invested around this opportunity. I would say modestly we were actually kind of early to it. Others have now caught on to it. And if you look at the stocks, for example, of nuclear utilities that have less regulated power and also clean power, which is important to these hyperscalers, they've shot up. I think people have woken up to the fact that the conventional projections of electricity demand over the next 5 to 10 years were ridiculously conservative relative to what's going to happen. And we're going to face I believe we're going to face a significant power crunch in this country unless we do something. And so we're running into the conflict between the desire to reduce our dependence on fossil fuels and the need for power. That's right in front of us.
That's just what I was going to ask about, because this goes right against the need to deal with the climate, where we were trying to give up the fossil fuels, and this drives us back into it. Unless you go, for example, to nuclear, maybe those small modular reactors or something.
Look, as you know, I think you may have even talked about it on your show, Bill Gates has a project, I think, out in Wyoming or someplace to build not a small reactor, but a new technology that involves less heat and less water and so on and so forth. But he doesn't. It's going to be done in 2030. And he doesn't have a permit for it. So we're a long way. I think we're a long way from nuclear happening. It could happen. I think the technology is there, whether it's small nuclear reactors or different kinds of nuclear technology. But I see no support at all from people to do it. And so the result is we're going to have probably some coal staying around longer than any of us would like. Probably building more what are called CCGTs, natural gas generating facilities, in order to support the renewables, because obviously the sun doesn't always shine, the wind doesn't always blow, we all know that. So you have to have baseload power. And we're going to find that we're doing more with fossil fuels than any of us would like.
So finally, Steve, give us a sense, because you're a long-term investor. You're looking out there a ways. And you look at the economy overall. I mean, we've had extraordinary time of growth, from World War II on, but certainly in the last 30 years or so. That's been challenged more recently. Productivity has sort of backed off a bit. Maybe it's coming back or maybe not. As you look long term, what do you think of the opportunities for an investor in the economy? What do you think are likely to be with us for a while and really grow?
Well, you have to have a view about some of the things you just said. The real problem in the economy is slow productivity growth, in my opinion. There's a decent chance that AI will change that. It could be like the Industrial Revolution or lots of other periods in our past where we really get a transformational kind of change. And that would really be good for all kinds of businesses, whether manufacturing business, consumer businesses, and so forth. And so that to me is really the most interesting thing in front of us. Hard to invest around for all the reasons we talked about. But beyond that, I can't tell you there's a particular sector that I would focus on as being the place to go. I do worry a lot in terms of economic challenges about the budget deficit, the impact on interest rates, the fact that we are going to have to deal with this sooner or later. But at the moment, I think we're actually not in a terrible place.